Monday afternoon with the Midcap Mania. Nigel joins us as always to tell us what's on his radar today. Nigel, take it away.
Well, Sonia, today I'm tracking this glass company. It's known as Haldyn Glass, in fact, and it makes products for a whole host of sectors, for the liquor space, for the cosmetics, as well as food and beverages. So they're into making these bottles. What is the total capacity? It's roughly around 350 tons on a per day basis. They have two glass furnaces. That's two glass melting furnaces. When you get a glass in liquid format, then in fact you can make quality containers, and they have a capacity of around 1.5 million quality containers on a day-to-day basis. I was looking at the dynamics of the industry, and in fact 30% is from the unorganized space. So that's giving you, some kind of an opportunity in case GST is implemented. The organized guys could get more business. Moving on then, who are the big clients? United Spirits, that's up there. Pernod as well is in there. And we have the other clients like the likes of Dabur, ADF Foods, as well. Normally, when we cover in this segment, we look at a lot of fundamentals of companies, and very often I track companies that have given you very good CAGR over the last few years. Well, this is the opposite. If you take a look at the revenues, they have only been declining. The profitability has been declining. Even in fact, the operating profit hasn't been great. But the first 9 months of this year, well, it's been splendid. In fact, if you take a look at it, top line growth of more than 30%. The operating profit has doubled on a year-on-year basis in the first 9 months of the year. And the net profit they've done, as per 9 months, is close to around 10 crores. So fairly good. And I was taking a look at the operational performance as well on a quarterly basis. Fantastic. It's looking quite good. The last quarter, in fact, looked very, very good. So first up, the revenues. Last quarter, it was nearly around 50 crores. Normally, they've been doing 30 to around 40 crores. So let's see whether they can keep up that kind of a run rate. And in the last quarter, they did a net profit of around 5 crores. So let's see whether or not they can do that as well. But what was particularly encouraging was take a look at the operating margins as well. That has improved. And in fact, that looked very good in the last quarter. So we even saw their margins go down to single digits. And the last quarter, it's more than 21%. Let's see whether or not they can keep up this kind of margins. Also, I was looking at the power to sales ratio, and that in fact has really moved favorably for the company. So I was trying to Google and trying to understand. They have some part of their power requirement that they get from gas. So I had a word with a couple of people from the management itself, and what they said was that 50% is via gas. So 50% of the power requirement is met via gas, and we know that gas prices have been following. So that's something as well that has helped them. Remember, the company is a net cash company, so they have zero debt as well. Moving on, what could be the next trigger? They have a joint venture with Heinz Glass. That's a German company. It's a 50-50 joint venture. This was entered in June 2015 itself. Now that's likely to be commissioned in the fourth quarter. That's maybe in this month or maybe in the past couple of months or so. What really will be coming out of this particular JV that they have? They'll be focusing on perfumes as well as cosmetics, and they'll be focusing more on the export market. Currently, they're more domestic oriented as well. So it's clearly mentioned in the audit report that they're going to be looking at starting commercial production in this fourth quarter. So this is going to be quite interesting. And FY18 then becomes even more encouraging. The shareholding pattern as well should come up for you on the screen. Let's get that up for you. The promoter stake is at around 52%, but only around 9,000 individuals hold close to around 29% stake in the company, and some few corporate bodies hold roughly around 8.5%. So it's a very tightly held company as well. What could be the drawbacks? Well, threats of substitutes, that's one of them. Second factor could be pricing power. I was speaking to a couple of their users, and they said prices haven't really moved up in the last 1 year or so. So pricing power could be one of those factors. And what if the power and fuel costs spike? Then their entire operational performance that we're talking about, that goes out of the window as well. But even in tough times, they have been paying good dividends. So you have to give it to the company. Even last year, they did an EPS of around 1 rupee 20 paise, and yet they paid out close to around 50 paise. Interesting company. Let's see where it goes from here. Big trigger really will be what can come out of the joint venture they have with Heinz. Back to both of you.